Okay, welcome back to page 12 of chapter 5. And we just finished doing the equity method entries. Notice there's two from chapter 2, a new one for chapter 5. These you have to know for sure. I put a little star beside them. Payment under the equity method, we noticed how it's different than under the cost method, and it actually matches the consolidated part for the parent. Now, if the parent is using the equity method, you can just read that because we talked about that already. So at the end of the year, if the parent uses the equity method, the ending balance and earnings on the parent's books will be the same balance as the consolidated retained earnings balance. Okay? So, for example, this is on page 4, we calculated ending retained earnings. Let's see if the equity method on the parent's books will give the same result. Equity method. So this is just a statement of retained earnings, but it's revised because we're using the equity method now. So the beginning retained earnings is $85,000, no problem. Then we add net income, subtract dividends. So we'll just take away the dividends. Now we'll deal with the net income. So net income is 18, like we said, up here or on the other page, because there's no subs dividends in it. Then we add the parent's share of S's net income. So these two pieces together are the entries to equity method income, and you could add them together or split them. The key thing is you take the parent's share of the subs net income as we adjusted it, and then you take away the amortization impairment changes for you. Okay? So keep these calculations and balances in mind when you're doing the problems, and we already did that on page 11. When you're doing problems when the parent uses the equity method, okay? So be really careful if you're doing equity method that you follow these kinds of things. Okay, so that was year 5. Year 6, we'll just go through it quickly. I suggest you pause it, try doing the entries on your own, use the cash one if you have, or the year 5 one have to start, but eventually you just want to inside out. So here's our net income, and of course this is done December 31st, year 6. Investment equity method income, you have 10,000 times the 0.8. Dividends, cash, and investment. So that's dividends, can't type. And then the third one is changes in AD. Now that one I will look at specifically with you. Now remember, this is year 6 only. All these entries are for the current year, or whatever year you're working in, year 5, year 9, whatever. Okay, so let's look at our changes in AD. This is year 6. That's on page 8. So page 8 is change. So remember, we're doing the whole year. We've got negative 1580, so it's making net income go down. So income's going down, and I'm really stressing this here because chapter 6, we've got net income going up or down because we're going to start changing cost of goods sold, income tax, tax payable, all kinds of things. So you've really got to be able to talk yourself through, is this net income going up or down? Okay, so we took our 1580, times it by 0.8, and we need net income to go down, so the investment, oh my goodness, investment's going to go down also. And that means this is an expense, it's not a revenue. But equity method income is fine. Okay, so equity method entries, there's 3 right now. Net income, dividends and changes in AD for whatever year you're working in. And the key thing you have to remember is net income going up or down, and which are the only to use except for this one. All others use investment and equity method income. All other entries. So even next chapter, when we're talking sales that were left in inventory between the parent and the sub, I don't care. You don't use the word sales, okay? So equity method income and investment, just write that somewhere or put a card on your desk or something so it reminds you when you're doing this. Okay, so that was year 6 in Euclid calculations if you want, and then see how they compare with the earlier calculations we did. Okay? So that was the equity method for year 5 and year 6. Now, other issues. Subsidiaries acquired partway through the year. Let's say you acquired it in August. You could only claim their net income and add it to yours for August, September, October, no December, 5 months. Okay? So you have to prorate. So you can do that. Impairment is not prorated, but amortization is. You can read this, but starting with chapter 5, 7 is all FVE. And I'll tell you on the final, when I give you the breakdown of the final, if you'll have to know INA for that. Okay? Acquisition differential assigned to liabilities, which is bonds payable, and I am not making that testable now. If you do want to see it, self-study problem is a nice one to show a bonds payable that has to be increased to fair value, and attempt it once you've mastered it. Basically, you have to take the bond and adjust it using the effective interest method and deal with it that way. It's not really hard. It's just you're putting together elements from 316 and this, and I'd rather you had the core consolidation straight in your head so that you knew it so well that when there's a new thing, you just look at it and go, oh, well, you just fit it in here and do this. Okay? Now, Appendix 5B has the working paper approach, and I've got the Excel file up for years 5 and 6. And remember, you can use paper approach or what's the other one called? Direct. Okay. Practicing consolidation and elimination entries 513 and 515. But for the exam, only chapter 4 entries. Okay, so don't feel you have to do the workers. If it says now do the working papers and you're going, I'm using the direct method, don't even do them. Okay? Because they'll ask you to do both a spreadsheet and the statement itself, so just do one or the other. So either do the spreadsheet or the statement they ask you for on Connect. And I don't have any working papers or spreadsheets for Connect assignment, but the other problems will. Okay, that's chapter 5. Yeah. Email me if you have questions. I highly suggest printing notes blank again and actually doing the questions without looking at anything. And when you can do that, you're ready to go and work on this stuff. Okay? Because you've really got to know chapter 5 and not just to look using your notes, because chapter 6 is a crazy one. Chapter 6 is the worst chapter in this whole course, not to scare you, but to get you to make it first. And if we have to take, an extra class or something, we can do that. Okay? Okay. That's it. Okay. See you in chapter 6.